wanted to kind of Hey guys, how's everyone doing? Welcome back to the channel. I wanted to kind of go over and show you guys one of the stocks that I've been buying very heavily into over the past month and a half-ish, and that stock is TD Bank. So I kind of wanted to go over it and show you guys how compounding this stock is actually going to help whoever invests in it over $100,000 over the next 2 to 3 decades. So to start off, the price per share right now is at $60.60. It's trading in the middle of its 52-week high. For its price to book ratio, it's at about 1.25. I usually like investing in stocks below one for the price to book value, but anything around it I'm usually happy with. Next thing is going to be the payout ratio. You guys might see 52.64% on Yahoo or on Seeking Alpha, but that's actually false. If you guys check the last quarter, they're actually a little bit above the 100 percentile mark for the payout ratio, but one quarter's performance it's not a determining factor for a stock. There you go. Next, we have the 5-year dividend growth rate. Any stock that's at near 10%, I love them. I can think of Starbucks on top of my head. That's another one that's at near 10%, but that's it. So I usually look for stocks that are above 6 to 7% for the dividend growth rate. And this is perfectly above that. So yeah, the dividend's at $3.16 and the yield's at 5.21%, and that's mainly the reason why I'm buying into TD Bank. Whenever I can get a world-class company with such a high yield on it, and a safe yield, I should say, it's always amazing, and I always love investing in these high-quality stocks. So in terms of revenue, they've actually been growing it year over year, and I'm very happy. I don't know about 2020 because of the whole corona situation, but that's still to be determined. But as of 2019, they've actually grown it year over year from 2018 to 5.71%, which I'm very happy with. Usually a company this size, I usually like seeing about a 4 to 7% growth, and this is in there. In terms of net income, it is lower than what I like to see in a company this size. Last year over year, net income growth was 3.61%. I did a little bit more research, and I found out that's actually because of the restructuring plans that they're doing, which should be complete by 2022. So I'm not too worried about this right now. We'll see how it kind of plays out. The part that is kind of worrying me is the earnings per share. So as of 2020, we're kind of estimating that they're going to be getting $4.69 per share, which is, I guess, okay. It does cover the dividend amount, but it's still not what we want, right? We're going to be going from a 50% payout ratio to a extremely high. It's not going to be sustainable. So I'm trying to predict when they're going to be be able to sustain this dividend, and that's going to be near 2022 when they're going to get back around 50% payout ratio, and that's only assuming that they don't grow the dividend again for the next 2 years by 9.45%, which I doubt they will. They're probably going to be growing it by 4 to 5% max. But yeah, so in terms of earnings per share, so in 2022, we're estimating that they'll be doing the same numbers that they did in 2018 or slightly above it, which means we're probably going to have to wait until 2023 or 2024 to even reach the 2019 numbers again, which is kind of which can scare some people away from the stock. But if you're a long-term holder like me, I'm planning on holding TD Bank for the next 20, 30, 40 years. I'm not really honestly too worried about a few years performance. It shouldn't deter you away from the stock. And I think right now with the price to book value of 1.25, it's a very good time to buy. So I also wanted to show you guys how compounding and dripping the stock can actually make you over $100,000 over the next few decades. So I personally bought 15 shares of TD last month, and it's currently worth about $909 Canadian. And we're going to be assuming that I buy around 2 shares a month. There you go. For the rest of my life, for at least the next 30 years. And that's honestly doable. I'm actually planning on buying way more than that, and especially reinvesting the dividends. And for interest rate, it's at 5.21%. So we're going to put 5.21 right there. And it's going to be compounded yearly. So I guess yeah. So we're gonna leave it for 30 years to grow. I'm gonna see how much it gives. There you go. So if you leave it and you put it in a non-taxable account, you're actually gonna be securing yourself over $114,000, and that's assuming there's no dividend growth. The price stays the same, so you don't have any capital appreciation on it. Yeah. So you're gonna be securing over $114,000 if you are letting it grow over 30 years. And me personally, I actually have a longer time horizon. I can actually leave it for almost 46 years. And there you go, that more than doubled. So 16 years more. And I'm pretty much securing myself over $300,000 just off this one stock. Which is TD Bank, and I think right now it's one of those rare opportunities to buy such a high quality company for a slight discount. Other than that, thank you guys very much for watching and have a beautiful day.